Good morning and welcome to this edition of IG Live. It's Wednesday, the 24th of May. Let's take a look at the headlines. We're getting breaking news coming through here in the British economy, with UK inflation edging higher after the UK CPI coming in 8.7%. I say high, it's 8.7% higher than the expectations of 8.2%, but below that 10.1% print we saw in the previous month. Sterling getting a little bit of a bid on the upside. We'll take a look at this in just a few moments' time with DailyFX. New Zealand dollar on the way down. Meanwhile, we've seen another interest rate rise from the RBNZ, now expected to have reached its peak of 5.25%. And industrial metals on the way down. Big concerns about demand, or rather lack of it, from the Chinese economy. Let's take a look at what's happening with the volatility markets, up for a second day in a row, indicating that we are expecting a lower start to the trading day across the European markets and potentially across the world, as we see these debt ceiling talks not stall, but reach a little bit of an impasse. The expectations are that for the 69th time, I think it is, we'll have seen some sort of deal hammered out at the last minute. 69th time since the Second World War, I think the BBC was quoting the other day. Second day in a row of declines at the moment for London's FTSE 100, trading at 7,700. If we close at these levels, it'll be the lowest close we've seen since the 6th of April. German DAX, same sort of price action on the way down for a third day in a row, just above the 16,000 level. French CAC 40 is, I think, at the moment, one of the weakest in the European markets. You can see now here, but pretty much at levels not seen there since the 6th of April. At 73.24. Big declines across the French markets in yesterday's session. Let's take a look at what's been happening overnight in the Asia-Pacific markets, where we have pressure building in some of those markets overnight. I think we've got a chart showing us what's happening with the Asia-Pacific markets. Nikkei down 0.4%. Hang Seng down in excess of 1%, still about 90 minutes of the trading day left there to go today. S&P ASX 200 also on the way down on the session in today's trade. We'll take a look at those base metals affecting some of those miners in the Australian markets. Wall Street closed last night. I said it's really all about the debt ceiling talks, and so long as these continue to be dragged out, we've got declines across the board. Tech's taking the brunt of the knock, down 1.25% in yesterday's session. And this is where I want to take a look at the charts, because that drop that we saw yesterday, taking us below levels we had already looked at in terms of what had previously been resistance at 13,720. The market's down for a second day in a row today on the 24-hour market. It's down at 13,670. So you can see pressure beginning to build on the downside for these markets. Take a look at what's been happening with inflation here in the UK. Consumer prices here in the UK for the month of April at 8.7% after a 10.1% rise in March. The consensus has been for an 8.2% print. That's 8.7% in April, the lowest since March 2022, down from a 10.1% print in the prior month. However, still higher than the average expectation of 8.2%. Producer prices 5.4%. The consensus there had been for a 5.9% print, so that's lower than expected. Retail prices coming at 11.4%. We've been looking for 11.1% print on retail prices. Nick Corley joins us now from DailyFX. Nick, just explain more about this and the importance of this consumer price inflation print this morning for April.
Yeah, morning, Jeremy. It's a very important print. As you said, the expectations for the headline figure that we would go down, would drop the best part of 2 full percentage points down to sort of 8.2% level, which didn't happen. Obviously, inflation coming down is good for the consumer, but it's not coming down as fast as anticipated. Food mainly, still driving CPI higher. And if you also look at the core inflation rate, sometimes it's slightly overlooked for the headline figure. The core inflation rate actually rose from a prior 6.2 to 6.8%, which is the highest level since March 1992. So it's getting very sticky, and this is going to weigh on the Bank of England and on their next interest rate decision on June the 22nd.
We've got a chart of sterling dollar up at the moment, currently trading 124.55. What looks to be gains at the moment for sterling, but I think how much of this market really is steered by what's happening with the US dollar and this debt ceiling issue?
Yeah, very much, Jeremy, very much. The US dollar is the main driver of currency pairs across the board. We have in very high short-term US Treasury bill yields, 1 month bill yields at the moment around the 5.8, 5.85%. near a multi-decade high, and this is supporting the US dollar as people are demanding extra yield, extra premium to hold government debt, short-dated US government debt over this period when the US could potentially default.
Yeah, just want to quickly bring up a chart as well of euro sterling to get a better idea, perhaps maybe away from the dominant dollar. And in fact, it gets a very different sort of picture, doesn't it, with the euro now? I think what we're now at levels not seen since the 15th of December for the euro against what is now a stronger sterling.
Yeah, sterling will get some strength across some currency pairs, as you rightly pointed there. Euro sterling is fading lower and looks to be going lower still. You have other currency pairs, sterling versus the Japanese yen. The Japanese yen is weak. That's going up, continue to go up 172 plus. And as you mentioned earlier, sterling Kiwi could even be a pair to look at if the RBNZ are going to keep rates on hold from now.
Yeah. Okay, Nick, thanks so much indeed. Nick Corley from DailyFX with a view of the markets in the wake of that print at 8.7% for the consumer price inflation, as Nick was saying, the core number, a little bit concerning as we see a continuation of what is a concerning level of inflation for the Bank of England. Let's move on, take a look at other areas of the market and work out what else is happening and what could well happen today in terms of some of the other areas of the foreign exchange markets. As widely expected, the RBNZ, the Kiwi central bank, has lifted its official cash rate by a margin of 25 basis points to 5.5%, its highest level in more than 14 years. Now, this 12th straight hike since October 2021 makes the RBNZ the most hawkish bank in the world, with a total of 525 basis points added to the official cash rate, or OCR. 5.5% was the peak level the central bank announced its rates would reach, and now the RBNZ confirming it would remain there until the middle of next year. The OCR, it says, will need to remain at a restrictive level for the foreseeable future to ensure that consumer price inflation returns to the 1 to 3% annual target range that the central bank has, while supporting maximum sustainable employment. Let's take a look at this chart here. This is the New Zealand dollar against the US dollar. We already know, as we've been hearing, about the strength of the US dollar, and there's no real surprise we've seen the Kiwi drop. But in fact, in today's session, it's down below the 200-day moving average. Bearing in mind New Zealand's annual inflation currently running just below a 3-decade high of 6.7%. This drop is in context of declines for the New Zealand dollar against a whole basket of currencies. This is the New Zealand dollar against the Japanese yen. And don't forget, the central bank is still forecasting technical recession with negative growth in the second and third quarters of this year. So far as the New Zealand dollar is concerned against the Aussie, this is the Aussie rising against that weaker Kiwi. So you can see the Kiwi is down across the board as a result of its decision to raise just by 25 basis points, but keep that official cash rate possibly at this level until the middle of next year. Talking about what's happening on the foreign exchange markets, as we were saying just with Nick Corley just a short while ago about the strength of the US dollar, the Fed minutes will be published tonight at 7 o'clock UK time. Early this month, the Fed raised official Fed funds rate to by 25 basis points to a range of between 5 and 5.25%, while saying that further firming may still be appropriate depending on data. The Fed signaled it may be done with its tightening cycle. But I think if you look at what's been happening with the US dollar, this is the dollar basket here, that you have to get a greater understanding about what's happening behind the scenes. And this is this political discussion to try and get some sort of agreement across the political spectrum to try and agree to raise the debt ceiling. It's always a difficult time. There's always tensions raised. But as we've been explaining, that is a deal that ultimately gets done. It's just a question of how and the sort of path it takes to get there. We have until the end of the month, so still a few days to go yet of pain. But this is why the risk assets are down and why money is going into the US dollar. Now, in amongst some of the other areas of the market to watch out for, this morning we got the 9 o'clock release of the German IFO Business Climate, expected to fall to 93 in May from 93.6 in the previous month. And for this, we'll be looking at what's happening with the euro. But you see the euro down against that stronger sterling. This is the euro down against the US dollar, not too far away from this line of support we've been talking about at 107.39, which is a 61.8% retracement from the low point we took there back on the 15th of March at 105.16. and the swing high we saw on the 3rd of May at the 111 level. So currently trading 107.81. This is an opportunity to buy back into the euro-dollar trade. I suspect we've got some more pain coming through for currencies against that stronger dollar until we get the debt ceiling sorted out and work out just how the US is going to deal with all that. But at 9 o'clock this morning, in Germany for business climate could give a little bit of an opportunity to trade one way or the other for euro-dollar. Take a look at what we've got in terms of some of the corporates out. So I want to begin first of all with Marks & Spencer. UK retail is very much under pressure because of the consumer crisis that's developing because of high inflation. M&S reporting a 7.8% drop in annual profit. Strong sales growth offset by inflationary pressures on costs. Profit before tax and adjusting items 482 million, ahead of analyst forecast of between 436 and 440, but down from the 523 million made in the 2021 to 2022 period this time last year. Now, if you look at what's been happening with Marks & Spencer, now we have seen interesting uplift in shares. I'm going to draw this line here to explain what's been going on since the lows we had in the shares back in October last year. We have seen an 85% uplift in shares from that low point. And we're not too far away from that. While opening at 163.5, the fact that it beat profit, could we see a little bit of an uplift at the start of today's trade? Don't forget that we've got the FTSE down today, which might take some of the wind out of the sails of what might otherwise have been a positive start to the Marks & Spencer share price, 163.5. The company says for 2023 to 2024 year, it forecast modest growth in revenue. Meanwhile, DIY specialist and B&Q owner Kingfisher has come out with a sales update this morning. It's keeping its full year outlook unchanged after reporting a fall in first quarter like-for-like sales. Remember the likes of Home Depot doing the same sort of thing when the company was saying that the difficulties is that the consumer is under pressure, plus the fact you've got some very big comparisons to make in the previous year because we were all doing an awful lot more DIY during lockdown, and that spilled over into last year's numbers as well. Sales came in at £3.3 billion in the 3 months to April 30th, 3.3% lower on a like-for-like basis. The stock was up yesterday to 46.7. I can see very little in the Kingfisher number today to give me any hope about what's happening. Now, as I've been reporting, there is some news in the chip sector around the US and China. The ban of some Micron production by Chinese authorities has become a serious political matter in the US. We reported on Monday that according to the Cyberspace Administration of China, some Micron products had failed security reviews in the country. A decision not based in fact, said the White House yesterday, adding that the Commerce Department was engaged directly over the matter. The chair of the US House of Representatives went a step further yesterday, saying that the US Commerce Department should put trade curbs on Chinese memory chip maker CXMT at the forefront. Let me just show you what's been happening with Micron shares. It trades all sessions on the IG platform, and you can see in the last couple of days, if you look at the share price chart, we're down. But CXMT is China's leading maker of DRAM memory chips and the most likely to benefit from if Micron is barred from China's massive semiconductor market. So we'll have to see how this story develops, but it is developing overnight as we speak. Talking about chips, NVIDIA is set to post its numbers for the first quarter after the closing bell tonight on the IG platform. It trades all sessions on the IG platform, and you can trade this after the market's closed tonight. The street anticipates 92 cents per share, 32% drop in earnings compared to Q1 2022. Revenue also expected to fall, that by a margin of 21% to $6.52 billion. Let me just show you what's been happening with NVIDIA stock. Since the beginning of the year, this vertical dotted line here I've got was the beginning of the year. We've seen a whopping 126.28% rise. We've been down over the last 2 or 3 days or so. We will open this morning at 9 o'clock at 307.22, $307.22 cents a share. But with this move up that we've seen in NVIDIA stock, benefiting from a series of positive events, early this year, NVIDIA launched a new processor, a new graphics card, and also other products. Alphabet also revealed earlier this month that it is now using NVIDIA products to power its AI purpose-built A3 semi-computers. But will this big positive trend last? Well, that's the big question. When looking at the group's return on capital employed, some investors expressing some doubts. If you want to read more on Nvidia's earnings to come, IG senior market analyst Axel Rudolph has written a piece taking an in-depth technical analysis on the stock. Let's look at some of the other earnings to watch out for today. Snowflake, Abercrombie and Fitch in amongst the mix to watch out for that in that area. So both those I think coming before the bell this morning in the US. Now, the recent strength in the US dollar has dented the impact of dollar-denominated commodities, and there's also some growing concerns around industrial metals. And as a result of this, we've seen a drop in the price of copper today, amongst other big moves that we've seen. 16.37% down for copper since the highs that we had if you go back to the 18th of January. This is often seen as an economic bellwether. It's briefly fallen below 8,000. It did so for the first time since November last year. If we look beyond this psychological level, copper has lost 6.7% so far this month. Now, as the strength of China, the Chinese economic recovery falters, it's not just copper that is suffering in other areas. Zinc is a really big decliner that we've seen, down at 23.34. That stock in today's trade at commodity, I should say, is now at levels not seen since this little inverted head and shoulders here back on the 1st of October 2020. If it goes much further on down, you then got to look at levels not seen since July 2020. Aluminium, another one on the way down, losing 1.36% today and disappearing below that recent support take is there, down to October 2022 levels. And iron ore as well in amongst the mix. On the daily exchange this morning, closing at 678.2, down some 25.4% from the highs that we had. They're back on the 3rd of March, and indeed at levels now not seen since the 10th of November 2022. So big declines across the board for base metals on concerns about the rather weak weekly anticipated numbers coming through for Chinese demand. Let's move on and take a look at what's happening with oil prices. Reading a report overnight on Reuters suggesting that OPEC has had its eagle eyes on the price of oil. And if you look at the oil price that we've got there at the moment, taking a look at Brent, we are up today, and expectations are that if OPEC's taking a look at this, it's only likely to do one thing, and that is potentially take more oil off the market because of the big declines that we've seen, taking us all the way down in the last couple of weeks or so, down to this low point we had at 71.67 for Brent. We have subsequently seen a little bit of a recovery, but the concerns are, amongst oil users at least, is that OPEC might come in and start to look at ways of continuing to restrict supply, which potentially could well see further upside. So if there is any further upside, obviously the psychologically important $80 level would be the level to watch out for. Yesterday, crude stockpiles fell by 6.8 million barrels. This exacerbated the upside for the price of oil. Oil analysts foresaw a 500,000 barrel rise, 6.8 million draw. So that is a big reversal on expectations. Let me just quickly update you as well on what's been happening with the price of gold. Not much move there today. It's down at 1972. And that's where I'll leave you this morning. But if you do watch out for a couple of stocks to watch out for today, it's got to be Marks & Spencer and Kingfisher amongst the other areas of the market. We are back at 10:30 with China News.